May I come to you for cement, Rashi? And in a space whose fortunes are debated about the kind of capacities coming up versus, and the ROCs they are throw up versus the near-term pricing impact that comes in. So tell us on both. One, what do you expect from the quarter from select companies under your coverage? And what do you expect the year to throw up?
Sure. So for the quarter, Neeraj, I'll kind of split it between the Adani Group companies and the other companies. First, talking about the remaining companies, the trend basically on the pricing side, we're expecting marginal price increases with the East exposed companies perhaps seeing a little bit higher price increases. Some marginal decline in power and fuel costs, and because the bulk of the impact on the lower coking coal should probably kick in the fourth quarter. And because we're past the seasonally weak quarter, then there should be some sort of benefit on the fixed cost side. So by and large, there is an EBITDA per ton expansion across somewhere in the range of about 60 to 250 rupees is what we've kind of factored in our numbers. The reason I said we separate the Adani Group companies is because ACC Ambuja did take a pretty big hit on their power and fuel costs in 2Q. And I anticipate that that will reverse in a sense that their power and fuel costs fall about 15 odd percent, for them this time around. The wild card here would be if there are any other efficiencies or surprises, that the ownership change bring about. That is something, which is hard to kind of factor in at this point. But even just taking that 15% decline and the remaining factors being, the fixed costs as well as, the realizations as is, here the EBITDA per ton expansion is anywhere in the range of 400 to 500, on our estimates. On the volume side, the industry seems to have done well. Some of the larger companies like Ultratech, Shree, they should be reporting double-digit volume growth. ACC Ambuja's case, we've taken a little bit more moderate numbers. Reason being that last year, December was a year end for them. So they're already coming off a higher base, effectively. So, that's how we kind of segregate the quarter. So really looking out for any, sort of promoter-driven change announcements on the Adani side and general commentary across board on what's the likely pricing status. From whatever we understand, pricing in January hasn't been extremely gung-ho. We've heard some price cuts in some region and marginal cuts. Some regions have been marginal increases. So nothing, really moving too much, at least so far. So that was on the quarter. To your other question on what we can expect in the year, we feel that consolidation that everyone's talking about may not necessarily be positive from a pricing standpoint. A few reasons over here are, one is that we expect almost 35 million tons of supply to come in, despite whatever consolidation we're talking about, despite whatever M&A we're talking about. Per annum, 35 million tons of supply, and the bulk of it is by larger producers. The likes of Ultratech, Shree, Dalmia, ACC, Ambuja, which effectively means that these are serious, producers. It's not just flaky namesake capacity that's going to come. And if this were actually to come, the ask rate for demand just to absorb this is about 7%, which means that demand has to grow higher for utilization levels to kind of move up. The second thing is that if Adani, again, we're waiting for strategy from them, but if really they are focused on M&A and if they're focused on market share gain, and they have the ability to pull levers to kind of reduce their cost structures, I'm not sure if they would be kind of pushing price increases, especially at a time when they want to kind of do M&A. Third is, historically, we've seen consolidation doesn't necessarily lead to price increases. Between FY14 to FY21, almost 72 million tons change hands. These include like the Ultratech JVA acquisition, etc. And the pricing CAGR during this period has been sub 3%. So all in all, we aren't very gung-ho on on pricing. And therefore, most of our recommendations are split between, buy, sell, hold. But, the buys are more either driven by very company-driven factors or by valuations.
Okay, just wondering, where are you constructive, Rashi, within the space? I mean, whatever disclosures you can make, otherwise completely okay.
No, absolutely. So we are positive on the, like I already spoke about metals. So we have buys on Tata Steel, Jindal Steel, and we have a neutral on JSW Steel. I'm just keeping, just kind of naming the companies which I can talk about. And on the cement side, we have ACC Ambuja are our top picks. We also have buys on Ultratech, Grasim, and Novoco.
Wow. Okay, great. Raashi, thanks for that.
Sorry,
Speaking
one more. I'm sorry, I missed one more. NMDC, which we have a buy on, and we've also opened a positive catalyst watch on that.